The world's greatest geologist is on the verge of his next billion-dollar discovery. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at futuremoneytrends.com/hardassets.
I am Kenneth Amanduri, and last month we did an interview with Polny of gold2020forecast.com at Future Money Trends, and today we're doing a follow-up interview, and I gotta give credit where credit is due. First of all, Bo, thanks for coming on the show with me today.
Ken, I really appreciate you calling, and I really look forward to doing this interview again, so thank you so much for the opportunity, and hopefully all is great with you and your family.
Absolutely, and same to you as well. I'm looking forward to having this conversation with you. Let's start off with some of the things that we had talked about last month. Now, on September 10th, we talked about how the stock market was topping on July 20th, and you talked about that being the top, and you are still correct on that. September 2nd, the stock market would turn up, and we would go through this pause period, and this has occurred. And the Shemitah, we talked about this. A lot of people were concerned about the Shemitah, and it was a disappointment. You said that it would be a disappointment. The Hong Kong top arrived exactly on April 29, 2015, and the next leg down was to start on September 22nd and 23rd. That was the forecast, and it did exactly that. There's a few more down the list here, but Bo, let's talk about this. How have you been able to make these predictions and forecasts? And, you know, we got to talk about what to do going forward.
Thanks, Ken. You know, I've spent so many years trying to figure this out, and it's really come together beautifully. So thanks for referencing all those. But yeah, it's just the accuracy has been pretty amazing. It's when I see it happen in front of my, when I see it happen, it really shocks me still to this very day. And so yeah, we were not expecting anything to happen in September. We thought it would be a month of pause. And that's exactly, what ended up happening. The month of September, metals didn't go anywhere. The stock market didn't go anywhere except up and down. And all of our work is based on cycle analysis of cycles, and specifically mathematical calculations, and then overlaying the math calculations on historic cycle formations, and that allows us to have precision in what we do, and the key word is actually precision. We were actually fortunate enough to be precise in our forecasts, and like you mentioned, we were able to precisely call the Hong Kong market top on the 29th of April. And that was not just one, so that was the first one. Then we precisely said on the 17th to the 20th, the third week of July was precisely supposed to be the U.S. stock market top, and that was precisely what occurred. Then we were expecting a crash in August, and precisely that happened too. We were expecting a turn. And then the date reference in our stock market index was the 2nd of September, and that's exactly what happened. Markets rallied up. And then last we spoke in our interview was just after that September 2nd date, which we were looking for a cycle high, for a cycle to move up. And when we did an interview, I think it was the 10th of September, we were forecasting that the markets would pause, but the September 2nd would be an up cycle into our next time point. And our next time point on the stock market index, what we call is the blue index time point. And that blue index time point, we didn't give the date in the time of the interview because that was still into the future. But now we'll give the date, and the date for the blue time point on our stock market index, again, which is available, and you can see these videos on our webpage. But the blue index time point on the stock market was officially dated yesterday, October 13th of 2015, and the Dow at that time was just over 17,000 points. And today, in theory, if it turned perfectly, if it takes a few extra days, and it would take a few extra days, but in theory, if this is to be a perfect turn, then we should see the first day down today October 14th. And the markets are now closed. And Ken, what do the markets look like today?
They're down, and it's incredible because at the time of our interview, you specifically gave me the date as to when you wanted to do this follow-up, and it was specifically for that reason, is that you were anticipating the next leg down of the market. And it's incredible the precision that you've been able to predict these markets. But go ahead. I know you hadn't finished your thought yet.
Oh, no. So that was a great point, because after the interview, after we went off the air, I basically said, Ken, if you have time, could we maybe pencil in October 14th for a follow-up interview? And just like you just said, because our cycle, that was our blue time point for the turn. And so yesterday I did an interview with Kerry Lutz, and I specifically, Kerry said, "What are you going to do about it?" I said, "Well, I bought puts." So I went short, and all subscribers who have our stock index, if they were following the turn, they were the forecast was specifically yesterday, the 13th, to be out of all positions and go short. And so not that we so that was that was a turn at that date time point. So and today is supposed to be, in theory, whether it takes a few extra days, like I say, here or there, sometimes a turn can take a little longer, but basically as of yesterday, that should have been the final day, and the inflection point in the stock market and world markets and the dollar should have occurred yesterday, the 13th. Now we're expecting the next leg down on the U.S. and world markets, on the dollar, and what we're forecasting now, Ken, is the lows of August are all going to break. Okay, they could break in the month of October yet, but we believe that they will break no problem into November. We expect November to be a complete meltdown on the U.S. and world markets. And as the markets collapse, we're looking for a cycle low, and that on our stock market index is a specific date, and it's the black index time point. And so we've got that specific date currently, and that we forecast to be the next cycle low before a bounce occurs. And then following that bounce, there will be a bounce into a lower high. And then following that, we can see a continued downwards pressure and momentum into the year, as we mentioned last interview, into the year 2016 for a significant price low, possibly down as low as 70%. We'll have to see how low it goes, but it could be something of that magnitude. And ultimately, the long-term picture is still a 5 to 7 year down cycle, so into the year 2020 to the year 2022, and that's kind of the bigger picture.
It is amazing, and to be fair, 160 points down today could just be a trading range. I mean, it could just be, after a few days, but I anticipate this to be the point where we do see a major move, because like we've been able to point towards, you have a lot of credibility, and your research is very, very credible. So as far as the global economies are concerned, what do you see happening across the world? I mean, what countries do you see being impacted the most by this major global downturn? Well,
on our webpage, we have just recently, we did 2 videos in early September where we made some forecasts, and that's the thing which I made reference to earlier, and all those forecasts came to be so far. Our third interview was just posted about 4 or 5 days ago, last week, and in the video, several slides into it, we show the S&P 500, the Toronto Stock Exchange, London FTSE, the Hong Kong, and then also we added on this slide series Australia, Japan, Germany, and Switzerland. Okay, so if you look at those, and the key that we try to illustrate, and again, we try to keep this simple so everybody gets it, but the concept is this. When markets rally, and these are monthly charts, okay, as you've seen, they're not like daily charts, okay, so these are like long-term charts. Each candlestick is one entire month, as you know, Ken. So they're large, long-term projections, and so what they illustrate is in a 7-8 year window of time, what you're seeing is this massive wedge that has been supported, and they're ascending wedges. And then in August, all the wedges broke. And so what that means is, and I started the video with, everything in our world is based on faith and confidence, okay? And so when a wedge breaks, what it does is it starts to illustrate that faith and confidence is breaking, okay, in the system. And so what ends up happening, as the wedges begin to break, you start to lose faith and confidence. And so once the wedge breaks, faith and confidence becomes questionable, and then you get this pause, and then Australia market, Japan, Germany, Switzerland, they're all illustrating the exact same cycle formation. And so because they're identical cycle formations, what it illustrates is that they're all going to follow suit forward, and that would then be a flush straight down or a crash. And so we expect this crush to begin now. Okay, now that the pause time window, which would have been through yesterday. Now, again, you're right. It's 180 points or 60 points in the Dow. Could bounce around a little bit, or it could just continue to fall. We will find out soon enough. But when you use turns in cycles, it just delineates a time in a time. And after that time, the time ends for any momentum that could continue upwards. So if it went on upwards for another 2 or 3 more days, it didn't change anything because it doesn't change the long-term weekly or monthly trend, if that makes sense.
No,
okay?
Absolutely.
However,
no, go ahead.
Yeah, and so, but we do have an inflection point as of yesterday. So the probabilities for follow-through to the downside are stacked high now versus the possibility of it not going down. So the possibilities of it rolling over, so from Australia, Japan, Switzerland, Toronto, London, Hong Kong, all those markets, they have identical pattern formations, and so price is irrelevant. It's time that matters, and the time for the cycle is now downwards, and so what you're going to see is break of all supports. So the bottoms and the lows that came in the month of August, they all had different price points across different world markets, obviously, but it doesn't matter because ultimately those lows begin to break, and then by November into, as the year progresses into next year, you're going to see lower lows and then bounces, which, like we mentioned in the last interview, they will be nothing but a lower high, and that's considered lower highs and lower lows are a bear market trend.
Bo, let's talk about precious metals. You had talked about October, and I skipped over this in the beginning. I had it in the intro for you. But in October, you expected the descending bullish wedge to break out for gold. And you actually did talk about that. And we're seeing precious metals start to break out. What are your forecasts for gold going forward, and silver for that matter?
You're correct. If anybody wants to go back and listen to the interview, and I'm sure you've listened to it, but what the interview specifically said was, we said September expect nothing exciting for gold and silver. And that's exactly what happened. There was nothing exciting for gold and silver. One, we had a long-term 50-year cycle that ended on the 23rd of September. So until that cycle ended, nothing was going to happen. So the cycle ended on the 23rd. On the 24th, for 7 more trading days, this pattern continued sideways a little bit down, and then starting the first week of October, and we did say in the interview, beginning the first part of October, we expect prices to begin to move upwards, and then in early October, we expect the 5-year wedge on gold to break, and that's exactly what happened, Ken, actually on the 9th of, actually in video 3, we even make specific reference to that, and the wedge was supposed to break between the 7th and the 9th of October, and that was last Friday, the 9th. The wedge did break. We sent out a mass email to our entire email list of anybody who's associated, who basically gave us their email. We sent out a mass email saying the wedge has broken and enjoy the ride up, is what we quoted, okay? And that wedge it broke by like $5, or I think it's probably no more than $7 or $8 on that day, and no one believed, or very few people believed. But now what's happened, Ken, today? Okay, for 3 trading days it's been above it, and today's the 4th trading day. And what did gold do today?
You know what, Bo? I didn't check gold today, but I would imagine it's up.
Yes, yeah, that's exactly correct. And last I checked, it was up nearly 20 or over. Or it took out $20. So let me see so gold is up $19 and change. It's at 1188. So now gold is up officially 4 trading days through and up and above and through the 5-year bullish wedge formation. So it was a descending bearish wedge. We were expecting the wedge to break the last week between the 7th and the 9th. It broke on the 9th. And now on the 14th of October, we have 4 trading days above the wedge or through the wedge, and gold is beginning to go vertical. Okay, and today gold is up $19. So we continue. And we've mentioned this in our last interview as well, that October is to be a very good month for precious metals. So we expect gold and silver to have a very, very impressive month. The people are going to try to catch a pullback, and I doubt there'll be much of to anything. And I think we're going to have. I think the word best to use would be explosive price movements on gold and silver this month.
Wow. I mean, and I was actually just doing some research earlier today and looking at some of the bull markets that we've seen with the junior mining sector and gold, from the 1970s, what we saw in the 80s and the 2000s. Is this going to be like anything we've seen over the last 50 years?
So great question. With relation to studying history, that's exactly what I did. And I went back to the year, not to the 1970s, that's 1970 time frame that you mentioned. And actually, we live very, very similar in terms of pattern and price formations. I did a public update a while ago back, I think it was in the summertime in July or August of this year. And I basically compared gold to the 1970 cycle. And the low was expected in August of this past year. That's exactly what happened. And then from there, if you compare that cycle, it was pretty fascinating. But right now, gold is on a projectile into years forward into a minimum price target just under $10,000 if it were to match the similar pattern and price targets that occurred in the 1970s through the 1980s.
Wow. Well, but we are going to be seeing some different fundamentals behind that, correct? With the way, we're expecting global markets to correct and then people to flood into the precious metals. It's kind of unprecedented. We can't really compare the 2 time periods. Would you agree with that?
Oh, absolutely. Nothing is identical. The word is similar. Okay, so life never replays itself perfectly, but you'll find extreme similarities between past, present, and future. And so to not if I never studied the past, I would never be able to say the things that I've, the forecast that we've made so far, with the accuracy or precision that we've had so far, right, without actually looking at the past. So you can't ignore the past. You actually you have to study it, and you have to analyze it in extreme detail to be able to project and forecast into the future. And because of doing that, for example, that's why we were, at the last interview, forecasting a move vertical to begin in October for the precious metals. And today we're, 4 days into a price move on gold and silver. And in the stock markets, potentially and in theory should be rolling over right here into an absolutely devastating, crash of the century into, next year.
When you look at the precious metals and the junior mining sector in 2001 as an entire sector, and then you kind of look at that exponential chart going up to 2010, 2011, and then that correction that we've seen since 2011 to now, what do you expect this bull market to turn around with? I mean, when I look at the 1970s bull market, we didn't really see anything like that until another 20 or 30 years later, speaking about the 2001. But from what I can tell, it looks like we're going to have a spectacular bull market like one right after another with just this bear market in between?
You know, Ken, I got to compliment you. That's a fantastic question. And the reason I want to say that is because I've actually discussed this in several of my updates that I post publicly. So I know you're talking about 2001. Let's take you back further, okay? Let's go to because you mentioned 1970, 1980. Okay, so let's go to 1980. 1980, what happened for gold? Gold went up to what, $800 and it topped, correct?
Something like that, yeah.
Yeah, something like that. Yeah, and then silver at that time went up to like $49 or $50 as well too, and then it topped and it fell too. Correct?
Right.
Okay. So now we're going to apply cycle theory to that time point. Okay, because you mentioned like 30 years and things. So let's put some precision on that. Okay. So 1980, we're going to now take a multiplier of 7 and a multiplier of 7 years times a factor of 3 cycles. And that would take us to 3 times 7 is 21.
Okay.
21 cycle years. Where does that end us up at? You add 1980 plus 21 cycle years puts us specifically to the year 2001. And that's the year you just referenced, correct?
Right.
Okay. Now we're going to take cycle theory precision further, okay? And we're going to project it into the present and into the future. So now from 2001, we're going to add another 7 years. So that would take us to 2008. Correct? Okay. What, in theory, is supposed to happen in 2008? A new cycle high for gold. Well, guess what happened in March? Gold took out 1,000 and topped out at, I think, $1,030.
Yeah, I remember that.
And then it fell. Okay. Remember that? Okay.
I remember hitting 1,000 on New Year's.
Right. And it was right around there or something like that. And then it went to like 1,030, and then it dropped, and then that was the end of that cyclical bull market, temporarily. But it topped out in 2008, and everybody's like, well, why did it drop? Well, because the 7-year cycle ended. Okay, so now we're from 2008. We are going to add another cycle of 7 years. And what year does that take us to, Ken?
2015.
That's right, this year. Okay, so don't hold me to this, but if my cycle theory, or if cycle theory is correct, before year end, expect new all-time highs for gold and for silver. Okay. Now, will it happen? God knows. Okay, but I will tell you, I have in my cycle counts, my day counts, nothing but ups and ups. We have a lot of up cycles coming at us on the precious metals. Okay, and so all we need is a short squeeze or a flight to safety, and precious metals, and all heck could break loose in the precious metal industry. In the pricing of the precious metals, and we could, in theory, go to new highs. My longer term cycle doesn't. We have one cycle high coming in the year 2016, and I am on record doing another interview with I think it's SGT Report. I basically said we are expecting 3 digits on silver in the year 2016. Okay, so we will have to see how this year ends up, and then what goes into the year 2018. But the cycle theory tells us that we could see some astronomical numbers still this year. And again, I'm not. To me, more importantly, is the day cycles currently. And all I know is, we trade more shorter term right now, looking at the shorter term aspect, and we have a lot of upcycle going into year end. Okay, so we'll see what prices will come, but it could be very exciting yet this year.
Bo, in conclusion then, I know you have a paid service, and if people want to find out more information on you, go to gold2020forecast.com. But in conclusion, what are you suggesting people do in a general sense with their money and protecting themselves in these unprecedented times?
That's a great point. And it's just, what do you do? Well, first off, go to our videos and watch them, okay? We made some forecasts that have been not like kind of accurate. They've been precise. You know, we've made a cycle high. We called a cycle high for Hong Kong. We called the next leg down to the day on Hong Kong on September 23rd. It fell 1,700 points. We called the top for the stock market on July 20th, and then it crashed. And so, you know, there's one point after another, you know, that can be verified. But the point is that, you know, statistically, if we've made 4 nearly perfect forecasts, and right now we have a cycle turn that occurred as of yesterday, the 13th of October, I would say the possibility of us being continued right or correct into the future is probably pretty good. And so yesterday was a date to make sure that you're out of the markets, if you are in the stock markets, and it would be also a day to, you know, to put on some hedges, or, you know, not only hedges, but you know to trade the downside. So so that would be in terms of protecting yourself. But then secondly, the other way to protect yourself, you know, I believe, you know, it's like I say, you know, it's faith and confidence and credit. And when that's lost, you know, all that's left is physical gold and silver. And if you're not holding physical gold and silver, then, you know, you're banking that there's going to be faith and confidence and credit, because everything else is just paper.
Well, that's great advice there, everyone. That's Bull Polny, again, with gold2020forecast.com. Check out the videos that he's done. And if you haven't, listen to the past interview, and I guarantee you'll be very impressed. Thanks, Bo, for joining me today.
Ken, I really appreciate it, and thank you so much for having me back on. Thank you.